Good morning, traders. This is Alex with the Matrix program. It is April 8th at about 7 in the morning. A little wild action going on in the crude oil, of course, which is par, and also the metals. We'll kind of look through the Matrix program with some comments. This is my X account. If you're interested, it's a CBOT Man 33 is my handle, and this is where I post stuff. Now, I just posted this morning, 23 minutes ago, and this is what we'll be going over. So you can go back and reference that and other stuff along the way. Okay, let's get into it here. I'll try to keep this brief. Again, I like to do these videos every once in a while so you understand where I get this data, right? When you see this pop up on X, it's nice to know what it actually means. And today's kind of an important day, so we'll kind of go over that. Okay, let me flip it on to the actual Matrix program. And again, this is the same thing. Now we had 3 trades actually this morning, corn and S&P and the euro dollar. Now I'd like to do the actual US dollar, but it's too thin. The euro FX is kind of the opposite of the US dollar. So, so yeah, we had a couple flip, and we've got, currently we are short 1, 2, 3, 4, 5 commodities. Which gold and silver are pretty scary if you don't have the coin, and orange juice too. So the ones that are short are pretty freaking, and natural gas. All but corn is the wildest market. So, and as you can see here, this is the stop, and this is the percentage. I call it volatility to the stop area, right? This is what your risk is. Now, if the risk is under 7%, no big whoop. But when you start getting over 10, of course we're long the crude, so that's a positive. But like nat gas, 18% of silver, and it was more than that. We raised the stop up. That's maybe a good time to maybe look at options, right? When the volatility gets to the risk area is so wide, right? Now the short-term trend, we have expanded 1, 2, 3, 4, 5, 6, 7, 8. I think we only had 3 the last time we did a video. So again, kind of an indicator that, now again, just because of short-term trend, we're still long beans and we're long wheat. The stops are pretty close though. And we'll go over those. Let's go look at them right now. Okay, here's the corn. And you can see kind of a squaring of time and price, one box up, one box over, or 1 quarter moon. Again, we do quarter moons, and the square of 9, right? So it's a pure mathematical, got stopped. Our stop was here. Now the stop's over the highs. Here's the one-to-one coming back down to square this range mathematically. One up, one down. So, but it's a chopper, right? I mean, here's the previous solar eclipse right here. And here's our current solar eclipse down here. So this is the area of support. This basically is just a dud, to be honest with you. Here's beans, a little more active, and you can see this aggressive outside period down. We have not got stopped out yet or into a short. Now we got long down here, so it'll be a good profitable trade. Here's the wheat, same kind of situation. Now it got hammered. Let me see. Wheat is down 18, almost 19 cents at 3%. So, but we have not got stopped on this position. Now I'm trading December. I like to stay out of the volatility as best I can without missing out on too much. Here's the meal, kind of a chopper also. Here's the previous solar eclipse. If I don't mention that, kind of always glance over. Again, this is this second yellow box because that's support, and then of course the current one is also could be support or resistance if it's been active. Now this has been a dud, right? So we had some action on the previous one, and it went, basically made a low and made a high halfway between the two solars. Let's go on to coffee. This is a wild one. If you've never traded coffee before, man, brace yourself. Have some extra coin laying around because it gets pretty volatile. Even on a systematic approach. Of course, we are short from up here, so it's a profitable trade, unless it gaps over us. But this action here as we came into the first of the year, so we took a loss as we rolled into this new year, which happens quite a bit actually. Here's cotton. That's the one I've been preaching about back in here. I really like the bottom, even on the daily chart, and it did follow through. Now you can see I drew this in. This is kind of the one-to-one, right? A parallel of this previous range. So we were kind of up in that area. So a little, unless you know some fundamentals or something, that's pretty sketchy to just buy strength up here. It didn't make sense to me. And the solar eclipse, previous one, was this old high. It makes sense that at some point we could break back to that on a normal swing. Now, unless, again, the fundamentals are something's really up and, you're on that, you're undervalued kind of approach, which happens in the commodities, right? Stays down too long, goes up too high, too fast, right? That's for every action is equal but opposite reaction. Here's sugar, kind of a great trade. Now this one, if you're a trader, This is back to the old highs. Um, our stop's still down here. We've had a pretty good dip. I like this bear trap that we had right here, right? Now we've broken the swing. So as a swing trader, you're buying the dips, should be. Um, and the previous solar eclipse is up here, so nothing much. But here was the lunar. We kind of haven't really taken out the high of the lunar. So kind of in that chop potential. So you buy a good dip, and this to me is a good dip. I like this one. Um, and I'll move on. Juice. Here is orange juice. Now this one, again, you got to understand the whole premise behind orange juice. It dropped freaking 87% down here, right? It was the biggest bull market, twice as bullish as silver. I mean, it freaking went up 10 times. I mean, it was the craziest freaking blow. And, fundamentally, it was so bullish. And then once the trees started dying, the market dropped 87%. People drink orange juice, they drink coffee, right? I mean, I don't think that's going away anytime soon. So, um, but this interests me. I mean, I wouldn't be short. I mean, I think if anything, if you wanted a weird trade, you go out and buy out of the money calls if you can, right? I mean, orange juice is so damn thin, but that's kind of my mentality. And maybe there's some stock market compatible thing, right? That you can go out in maybe a year, buy out of the money. I don't think you need to go out that far because if this takes this out, I think it'll go up pretty fast. It'll probably blow through this, and I could see it making a higher high, just as my mind is. Here's the crude. Again, I added this one. This is kind of a 2x1 speed, right? This one is a 1x1. And you can see that this market kind of had an explosion as we kind of forecasted. These numbers were all good. These lows were good. Stops down here, so kind of a high risk trade, even though we're long from way back here. We're going to make 20 grand on this trade. But it's still a lot of risk for me because this big ass bar, right? It's kind of what silver did. It's kind of what gold did. It's kind of what platinum did, palladium, and now crude, right? They're taking turns. So on these big pushes, and as we know, and again, 87% down 20 freaking dollars, and we're not stopped out yet because we're getting our stops way down here. Now again, this system, which it's a trading system, but it has no filters, right? You blindly put it in, so your risks and rewards are legit, and they're pretty big usually. Usually make good money if you get one of these big old trends. Big money. But when it gets chopping, you kind of get beat up pretty good too because you're stopped, especially on volatility like this. If you happen to get in here, your stops here. I mean, that's quite a bit of risk. Anyway, you can see that it's not bearish yet, so be a little cautious, even though you're down 20 bucks. I'm not a big fan of buying this right now. I mean, I think that was your explosion, similar to silver. I thought silver could get to 140 and it got to 120, so I missed that quite a bit. And now the fall off has been real. But again, maybe these aren't over, right? Again, you don't know. Here's nat gas, kind of a part of that chop. But man, it's already down here where crude oil isn't. The weather's been awfully nice. I mean, I've had to run my air conditioner more than my furnace. So here in Kansas. So stops way up here. So again, high volatile risk. And this is the actual chart I'm trading. This was a 2x speed, right? I can plug it in. So the square nines are, double. But this one is a 1x1, which is normal, right? But man, it's so you can't see it. Now, but I do put the stops in based on this, just so you know. Here is the E-mini S&P. Kind of made a nice low, but man, pretty high risk trade. We got long today. So again, today is the 8th. So we got long in the overnight, and this we kind of called that, right? This was the cardinal cross, Gann's cardinal cross of the one-to-ones up and down, right? So that was right in this zone. Kind of cleared it out, right, on a trap basis. So all that being said, now the problem we have is this is squaring out the range right here. This period could be a low, could be off a period, right? So no big deal, but just a little caution there. I think it could obviously this will be the halfway point kind of. This is the trend line, so I could see it taking out this trend line by a smidge, maybe get to here, right? That kind of thing. If it's just chopping around and trying to burn people's equity, that's the kind of action I think you could see. Now maybe it'll take another moon period. Now we only got a couple days left. April 10th is when this one goes off, and then we get into the new moon, which to me is more important. Here's the euro, and again, pretty nice actually trender. I don't have my trend lines drawn in. This is the previous solar eclipse, so kind of the resistance. Here is the current solar eclipse. So again, here's both of them together. So somewhere up here is kind of resistance, right? Your one-to-one coming down will be in that zone as well. So makes sense a little bit. Now we did have a trap, which I like, right? A bear trap. We had a bull trap up here, took out the highs, and we had a bear trap down here. So for every action, there's an equal but opposite reaction. I was expecting this trap. And it occurred, and now this is in. So if this is a long-term low, and this is the pivot, right here, this is that, you can do the math on that and do the measurements. That's going to be a pretty good, which mean again, since it's euro is opposite of dollar, that means the dollar is going to get pummeled if this is a low. Now again, we don't know that, but looks kind of feels like it. Here's your gold. A lot of people are interested but can't afford to trade it. So I don't know why. I guess there is micros, which is what 1,000th of I don't know whatever micro is anymore. Kind of out of that loop, the uh, but yeah, here you can see we're squaring out from the low. Now the low came in quite a bit before the eclipses, so kind of out of sync a little bit, and this high came in before the eclipses. So, but the secondary high came in on the lunar, so kind of maybe getting back into balance. But this is squaring out to the range, right? So mathematically, so this will be an important week. It could be a high up in here if we're in full blown bear mode, uh, that kind of thing. Now this is I don't have it drawn in, but this is the cardinal cross area, right where I got my stinking stop. So again, pretty high risk trade, really up to the stop. Now, once this couple days, then we'll put our stop down here, or wherever the high is, right? We can put it above this bar's highs. Now, hopefully it stays a little quiet, actually, so we can get our stop moved. Here is the silver, pretty wild beast. Again, we're using an 8x1 speed, if you can see it up here. So not a one, not 1x1, 8x1. So in all practicality, this 1x1 trend line is actually a 8x1 if we had it set on 1-to-1, right? So again, it's all mathematical. That's why it's always better to keep everything set in precision. 1, 2, 4, 8, 16, 32. Keep it in the mathematical realm. And then these speeds are all equal, right? To an 8x1 on a 1x1 chart. I know it's a little confusing, but anyway, now this is the um, kind of the area resistance. I think the cardinal cross area, which is halfway of the two crossing zones. We did have a bear trap here. So again, for every reaction equal opposite reaction, I think it's very possible we could have a bull trap. Now it might be just over this one, right? But it might be up here. Again, I kind of wanted 140, which is still out of the realm. And it could be the trap up there. Knowing silver, it could be kind of wild. Margins are tremendously high. So only the big funds right now are trading it. Um, back in my day, 5,000 ounce bar was nothing. It's like you take delivery of that and it didn't cost you much. Now 5,000 ounce bar is like go crazy. So that's the same thing with Bitcoin and anything else, right? I mean, back in the day, it was worth nothing. Uh, yeah, here's cattle. Again, we're kind of into the D's, even though we're still into the spot month of April. I like D's much better. April's better trading actually, but I just don't like to be in those deliveries and the faster pace stuff. And you can see we got long here last moon period and our stops here now. Now once in a couple days we can raise that up a little more comfortably. Here is Bitcoin, and you can see that the solar eclipse high or close is way up here, so kind of out of the realm. And this is the solar right here, and the lunar right here. So basically the same price level. So that's kind of the area that you're bullish when it gets above it and bearish when it gets below it. Here's our stop. We are long. Um, so yeah, I don't know. Just an interesting chart. Now this is 50%. Silver dropped 50%. Um, so that, in all these markets that have been bully, if silver and Bitcoin can drop 50%, you got to assume, be careful. Some of the others like cattle, right? They could proven that they could drop 50% from their highs. So, that's a pretty high price, 250. What is that, 125? It could get back to. Ooh, wow. Now that, might take a while in cattle. So anyway, that is it. Now I'm going to flip through the charts real quick on the bar chart, just to see if I want to show you a few things if I got time. Bar chart, let's go to the watch list that I created. Now this still has the stock matrix still on there, which is fine. I still update those charts since I spent the time to do it. Okay, let's flip through the commods. And yeah, I'm gonna do a weekly flip through. I normally don't do that. And we're gonna do a nearby weekly. So this is a weekly chart of the spot continuation. And again, I do have the solar eclipses drawn on here, and you can see the corn, even though the trend went down and we got short, it just broke back to the solar eclipse, for Christ's sakes. Just a chopper, really no big bull. We had a dollar range last fall or more, and then broke back 87%, like all these markets have been doing. So I don't know much about this and the fundamentals of corn right now, you know, once you squish it down, you can see that it's really insignificant. So just so you know, don't get too wild looking at it from a daily perspective. I think I'm going to keep these charts squished down, and we're going to just thumb through them. And I'll mention the commod. Now again, we're even though it says July, we're looking at a weekly nearby. So so anyway, here we are on the soybeans, and you can see we're kind of in the middle of no man's land. Here is the wheat. Really a pretty significant bull to a pretty significant bear. Uh, just a chopper, but man, we're right on the two solar eclipses, the previous one and the current one. So kind of resistance, I guess. And if we can make a new high, I think that's a green light special. I think it's a go-go. Here's the meal, kind of a similar deal. If we can get a new high, I think that's a green light special. So I mean, I never hardly advocate buying strength or maybe some out of the money calls, you know, 350 calls, because I think if it starts making new highs, it'll probably get up here pretty quick. Maybe a 6 months out window or something. Here's the coffee. Pretty good trade there. Um, we had a trap, right? We have a trap down here. So it's completed the mission of equalizing. For every action, there's an equal but opposite reaction. You can see that the volume's dried up. I used to look at the CFTC data. I used to, man, I spent a lot of time on that. Um, I gotta imagine this dropping off is kind of significant. That's pretty freaking high, and it's wild. I mean, I got hammered on the system because I had to go long at the end of the year because the trend is up, right? And then boom, got hammered. So it's gonna take a few months just to break back what I've lost by getting in on a specific date. Now here's the cotton. This is one of my more bully ones, and you can see this is down here in the Tweety. It's been a long enough bottom, so this base is huge, similar to some of these. Now this one was crazy base, but once you get these bases in and you get that power move, man, I don't know. You can the cotton can really fly. This was one of the ones that flew, one of the first ones. You know, lumber, cotton, um, and a few others that took off aggressively. Now I like sugar. I like trading sugar. I don't know why. Don't make much, don't lose much, but um, it had a 19% move and then dropped back. I kind of like this action on the sugar, and you can see back in the heyday when the Hunt brothers were taking over the silver. Sugar was the real steal. You know, squirrel, look over here. Look at the silver that no one really can trade because it's too high up margins, and sugar was like no margin, and it went up, you know, multiple of 10. But you can see that this action in silver, and again, it's a good market. You know, you get a lot of action now when Coca-Cola and Pepsi switches from sugar to corn syrup, right? So there's a spread always going on between those, and sugar is a big component of that. Here's orange juice again, the biggest bull in history. I mean, trees are dying, everything was just getting killed, and oh, it's never going to go down. Poof, 87% back to its area. All right, now it's set back up. Now, will it go spiking up again, or will it have to sit here for a while? That is a question I do not can answer. Here is the crude oil again. We're looking at spot, so it's a lot wilder. You know, negative. Oh, it didn't show it, them cheaters. This was negative. It wasn't zero. It was negative 40,000. Anyway, um, because it looked so bad, they had to change it. So what do they call that? The effect, anyway. But you can see this was the two solar eclipses, and when we broke back to it, it had a nice low, a little trap, and then poof. So since we have a trap here, I expect a trap up here. I think it was a trap. Again, I haven't looked at a spot chart. It looks like it was. Yeah, it looks like it barely took it out. So now maybe the trap will be, you know, on this high, right? So you can see we're just in the middle of no man's land. Gas hasn't changed much in history, right? So you know we're definitely hoovering here in Salina, Kansas at around $3. So of course we shouldn't be cheaper now. They make gas down the road for crying out loud. Here is a nat gas, and this thing can get really wild. I mean, it doesn't really show it, but it's a volatile one, and I lose a lot of money trading nat gas, or at least I have in history because of the volatility. I'm not a day trader, so be a good candidate for day trading because you want to be out at the close if you want to save your money. Here is the E-mini S&P, kind of a rounder top. I don't know if you've studied technical stuff, but those rounding bottoms, and of course this is inverted, right? Stocks are at their high, kind of an inversion. So the rounding top makes a little sense in the S&P, in my opinion. We're back to the solar eclipses, so I can't sit there and predict anything except for we're on resistance, and the system got long today. So on the 8th of April. So now if I can clear this out, I always, back here even, I called everything had the Trump effect, right? Trump was going to change stuff. We knew that. And he has doing a job of really mixing things up, getting rid of the deep state and all that kind of crap, right? So And that's what he promised. That's what he's doing. No big surprise. Was it going to be bearish the stock market or not? I don't think so. I think the stock market has responded as one expected through Trump's term. Once he won, it was on nothing but up. So, um, but anyway, here and there, we'll see how he will be remembered after all this new events that have occurred. Here's the euro. Again, this is a weekly spot, and you can see it's kind of in that top side of the chop, maybe up against the old solar and the previous solar. Both you can't quite see it. There's red and green, but they're both right there. So it's definitely resistance. And again, one of those candidates that you might buy strength above this high, or buy calls, or if you're short, maybe buy calls. Maybe if you're short one futures, you could buy 2 or 3 calls out of the money, and then cancel your stop, kind of thing, and let the calls be your protection. Here's the gold. Again, you can see a 26% drop. Pretty classy move. Now again, if it's over, it'll be down in here. So drop 87%. That's how the nature of the Super Bulls are. Here's the silver, kind of a similar deal. I got a lot of crap on there, but yeah, let me delete some of this stuff. I can put them back in. And these are the parallel channels I was kind of talking about. You can see that they're also show up on the daily. And this was our previous high, which will become support someday. I don't know when, right? But the $50 will be a pretty magical support, and I'm assuming, based on the math too, that it'll break below that, probably get to this old high, get around $40, $44, $45. That'd be your good dip long term down the road kind of thing. Hopefully down the road. Hopefully they don't do it yet this year. People would be whining. Silver shouldn't break. We're out of silver. If we're out of silver, the high's in. Damn it. Learn from all these bulls. When the most bullish technical stuff is out there, the highs are in every freaking time. Here's the cattle. Now, this is a spot, so that's April. Let me see if it's April. April. No, we just went to June. There. So, let me get it spread out so I can get exact here. Yeah, there's June. So we rolled, right? The spot chart rolled from April to now June. So let me see. The highs were 248.30 in the DEES contract, and the June that it's currently on is 248.45. So that is a new high. Again, if you're a trap trader like me, that's on the radar. Of course, I wish it wasn't a spot chart, but this ascending triangle, right, in your technical stuff, isn't real bearish, and making new highs in the front month is kind of wild. Now, let me look. I think I got DEES on here. Let's take a look at the DEES chart. It has not made a new high. So the spreads, right, which is a big component of cattle trading in the futures, hasn't made a new high in the DEES. If DEES makes a new high, along with the other deferred contracts, that's pretty powerful. You don't want to be short the cattle, I don't think, if that would occur. Now, hedging cattle, yes, absolutely. If you're freaking not hedged, you're crazy. You son of a bitch. These guys hedge some cattle with options, puts only, right? If you forward contracted some, buy calls against them if you're bull, but don't just stand here and do nothing, because we know these markets can break 50%. I mean, Bitcoin's a good example, just broke 52%. Silver broke 50%. I mean, it just happens. It's the nature of the beast. But here's your spot Bitcoin. Like I said in previous videos, if you're a stacker of Bitcoin, which again, I hate that word. I hate buying and buying and buying and buying and buying, and you drop 50% and it drops 70%, you're still buying. I mean, that's not me. I'm a trader. I don't ever personally try not to. I should say never. I try not to add to losers. I like to add to winners. I do not like to add to losers. That's just me. I'm not a cost averaging down guy. All those terms just mean I sucked at trading. I'm just going to stay there till I'm right. I mean, a 50% break. You should have been out when it broke the freaking swing. Come on, people. Anyway, we broke not only the small pivot, but the big pivot. This is the resistance, right? So anyway, that's the nature of the beast. What's this one? Oh, this is a soybean spread. No big deal. July, and this is the DEES. So again, the corn's definitely showing some weak stick here with the July DEES corn spread. Old crop, new crop, right? Spread making new lows. That's not a good sign. That means there's something fundamental that's bad going on. What's this? This is the Bitcoin cash, I guess. I don't know. Whatever it is. I did some work on a few other videos on that one. All right. I am done. I am just going to sign off. And again, hopefully everybody has a good rest of your week. And avoid the volatility if you can. If you're over trading, stop it. Trade within your means. These markets aren't going to be kind to the greed, hope, fear method, right? If you find yourself feeling uncomfortable, do something about it at least by the close, or use your put and call options to offset that risk or whatever it might be, so that you won't get blown up. Because these markets are doing that, right? I mean, and that's why the silver margins are so stinking high. 61,000 last time when I looked at them, I plugged it in. 61,000. Well, that's because it's moving that much in one freaking day. Um, Trade smaller amounts, whatever. If you're going to have wild stuff, do it in smaller amounts, especially in the stock market. In the futures, I guess you can trade some minis on a few of these, which is job lot size, or one, for grains, it's 1,000 ounce, 1,000 bushels versus 5,000 bushel contract. Some of them you can't. Crude oil you can. Shit, you can trade crude oil on your Robinhood, Coinbase account now, and it's a micro. It's a small one, real small micro, but that's fine. Keeps you going. But some of these, again, you can see, well, because I'm hugely profitable on crude, but 18% risk on silver, and it was 25 or something. I mean, you can't risk that. I mean, that's crazy talk, man. You're risking 15,000? You're shitting me. Stay out of those. Or again, try to use options if you can, or maybe the stock market somehow, something that can diverse your risk. All right, I'm rambling. Again, we are coming upon, uh, we are on, let me pull this back up. I forgot to mention that. Dang it, sorry. Uh, wow. Yeah, let me, we are on, I'll pull crude oil up. All right, April 9th. Well, April 6th, 7th was a big low last year. The annual is upon us. And now this crude oil chart, now again, it's July, so it's a little deferred, but the 9th, right? So that makes sense. And then I had another one, the 5th. So these dates are big, right? Stock market, let me go to like JP Morgan, uh, April 7th, and the secondary low is April 9th. So again, there's a lot of these. These annuals are huge. So I've been doing work based on back 3-4 months ago, that this was, this annual right now was going to be important. And part of the video why I brought this up right now, because of these annuals, what we're seeing today could be very different. Now, might be just a secondary event, maybe it's a gap, right? Gaps are the biggest, but let me look at like Tesla. That's always a volatile one. April 7th. So we had three lows. So you can go back and look at the chart. March 11th, kind of a head and shoulder deal. April 7th, and then April 21st. So all three of those dates are important. March 3rd. March 3rd. Kind of a nothing burger. And the pivot was important as well. March 27th. Right there. That was a low, pretty significant, but we took it out. So anyway, these dates are all going to be important on every market. So not just Tesla, not just the ones we looked at, but I think the S&P, let me look, see what the S&P, last year's low was April 7th. Secondary event was April 9th, and this longer term secondary event was April 21st. So kind of a similar deal, right? This annual could be interesting. So, and we're on it now. Today's the 8th, so pretty important. The S&P did bolt up, so that's important. Might not be an obvious high or low, but maybe this is an acceleration point. We'll see. No volume in it right now, but just an important day. This could be a high. We could be down here by the end of the week. So just so you know, use your caution. Your antenna are on high alert for weird stuff happening. All right, I'm going to sign off. Everyone have a great rest of your day.